What's up, traders? This is Matt with Conservative Trades, and I am launching another episode of The Trader's Mind. And this episode is titled The Overcommitted Trade Idea. There is something that happens to a trader just mentally when they've made up their mind that a stock should be moving in a certain direction, and even though it's showing all signs of not moving in that direction, whether it's just because it's behaving irrationally or maybe there's some kind of market manipulation tied to it, whatever the case may be, the stock just isn't moving in the direction that you really truly believe that it should be. And so oftentimes these stocks can, for lack of a better phrase, just end up kicking our butts all over the place. And I actually had that happen to me this week, several days in a row on a stock called INO. So I thought that it was very fitting for me to put together this video. Oftentimes, when I put these videos together, they're not just videos that I think can be helpful for other traders, and it's like I'm trying to be the sensei and you're the grasshopper. No, I actually put these videos together to help myself every bit as much as to help you guys. Okay, because these are things that I need to be reminded of too. Okay, and we as traders, we never arrive. We never arrive at the place where we can't learn these lessons. Okay, and if you ever get to the place where you think that you've arrived, trust me, the market will slap you in the face and remind you that you haven't. So again, in today's video, we're going to talk about the overcommitted trade idea. Now, real quick, I will say here, shameless plug for those of you who are not familiar with this channel. I actually started this channel just a few weeks ago, and surprisingly, we've already worked up to about 80 subscribers, and I've been having some pretty good action on a lot of these videos here, but every day, we trade live on the channel on YouTube, Monday through Friday, usually starts around 9 a.m. And then, of course, as it says up here, I provide daily recaps and video tutorials. And then, of course, this episode series called The Trader's Mind. And so I've been having a good time doing this and meeting a lot of the new guys that have been coming into the live stream. And I want to be a voice of reason in this space. And I want to be able to provide value to a lot of people out there who are either beginning a day trading career or seeking to begin a day trading career. I teach a conservative trading style. It's a style that, as you'll see even in this video that I'm doing right now, it's a style that can be very beneficial for those who want a very realistic approach to the markets, who may not have the biggest account, and maybe even just a very small account, but they're genuinely looking to know how to grow that account and to establish a solid income out of their day trading business. So be sure to go to this channel and subscribe if you're finding value in the content. If this information is not useful to you, then just move on. There's a lot of great YouTubers out there, and there might be other people you can identify with a little bit better than this channel here, and that's understandable. That's totally fine. But if you find value, consider subscribing and liking this video and telling others about it. So, okay, we're going to get into it here. So I want to start with an article that I found on Market Watch, talking about a guy by the name of Joe Campbell. The headline is, Trader loses $106,000 wants your help. He actually ended up opening up a GoFundMe account after he took this loss. But this is a perfect example of somebody who had an overcommitted trade idea. Okay, and just as it says here, his name is Joe Campbell, and he claims he went to bed Wednesday evening with roughly 37 grand in his trading account at E-Trade, and then he woke up to a debt of 106,000. I want to get down to this statement right here. This is him. This is a quote from him. And he says, "I was holding KBIO short overnight for what I thought was a nice $2 fade coming." First of all, you know what? Let me stop here. Let's just stop here. I was holding KBIO short overnight for what I thought was a $2 fade coming. So where did this start? This started as a thought. This is why we call this the trader's mind, because a lot of our trading and a lot of how we trade, how we take our trades, and how we deal with our trades and even handle our trades while we're in the trade, all comes down to our thought process, what we're thinking. And this guy was obviously overcommitted to KBIO. He was overcommitted to this short. How do I know that he was overcommitted? Because he was holding this overnight. You've got to be super committed to a stock to hold it overnight. Okay, day traders, most day traders, we go back to cash. I know I go back to cash. I don't ever hold a stock overnight. I don't hold on to any of these stocks overnight, especially not one like KBIO. You know, this is one of those pharmaceutical companies, I believe, and we're talking a micro cap stock. Okay, these low float small cap stocks are extremely dangerous to hold overnight. Now, there's people that do it, probably more typically in a long with a long bias position, which is probably a little bit safer to do because obviously you can only lose so much money going long, but if you're going short on a stock, I mean that stock could just run through the roof. You don't know how high it could go. Okay, so this guy was obviously overcommitted. He was overcommitted, and he had a thought about it, and he made up his mind that we're going to get a nice $2 fade. And at the close of the bell, I saw the quote montage clear out and figured, again, he's figuring, he's thinking, this is happening in his mind, okay? He figured that today there was no action after hours in the stock, okay? So what did he do? He says, so I went to my office for a long meeting. I got out of the meeting and saw a message from one of my buddies. He asked if I was okay since I was short KBIO. So now here's the other thing that I'm thinking, because we came up here and at the beginning of the article, it says that he went to bed Wednesday evening with some 37 grand in his account. Okay, so here's the thing. This guy is so overcommitted that not only was he willing to take a short on KBIO overnight, he was willing to hold a low float, a micro cap stock overnight, hoping to get a $2 fade in the morning. And obviously he put a lot of his money, he put a lot of this capital obviously into this to be able to wake up the next day, which by the way, this is where KBIO went. That day went up to almost $15 overnight. So he was holding way down here. But then when he gets out of this meeting later in the evening, his buddy's asking him if he's okay since he shorted KBIO. Now, I don't know how much KBIO had gone up in the evening, but if I came out of a meeting a couple hours later and I saw that this stock was shooting through the roof, I don't know, maybe at one point he was down like, I don't know, $30, $40, $50,000. Maybe at one point he was only down $10,000. Maybe he thought to himself, man, I should probably get out of this. I don't know. But whatever the case may be, he actually went to bed that night because it says up here he woke up to a debt of $106,000. So he was really overcommitted to this because obviously, again, when he came out of that meeting, he could have been down who knows how much. I don't know the details of the story, but even if he was down $10, $20, $30,000, I mean, at that point, you got to get out. You can't hold that junk overnight. But apparently he held it overnight, and whatever that loss was when he came out of his meeting the night before, this obviously wrecked him the next morning. Okay, and so this is the perfect example of what can happen. This story has happened to many, 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 many people. This is just one unlucky guy that we're hearing about, right? But here was my story on INO. And as a day trader, and I'll just bring in the trading view chart here. As a day trader, I don't hold on to these things overnight. I'm never that overcommitted to a stock, but I can get overcommitted to a stock in the sense of I keep trying to trade it, even though it keeps going against me. And that's what happened to me on INO this past week. But we're going to pause there for a minute, and I'll bring that chart back into play. And again, you guys know me. I don't do anything fancy here. I don't have any kind of fancy PowerPoint presentation with cool graphics lined up for you. But I do want to talk about this overcommitted trade idea. And I want to talk about how we can avoid being overcommitted to a trade idea, how we can really get the mental preparedness needed so that we can overcome the psychological battle that occurs when we get overcommitted with a trade idea. Okay, so here's how we do it. Number one, recognition. We have to learn how to recognize when a trade is just not working out according to our trade idea. That's the number one thing. Okay, how do we do that? Number one, we have to recognize the reality of the pattern. We have to check the pattern. We have to, look and see. I mean, is this pattern forming any kind of a pattern that could say that it would go in my direction? And here's the thing. On INO, the answer is no. I mean, I'm trying to short this stock. And, there's a pretty well-known fact in the day trading community that when you're having run-ups on stocks like this, you don't ever try to really shorten to the front side. You want to shorten to the back side. Now, admittedly, there were some times where it looked like we were going to go into the backside. Over here, this broke VWAP, it broke some key moving averages, and it looked like this was going to turn up to be the downside. And then, of course, it recovered. Okay? But if it recovers, then we're not on the backside of the action yet. Okay. And same thing here. We have another run up, but then it looks like, man, this could be it. This could be losing all the levels. It could end up coming back down and testing these levels. Of course, it recovers. So now we're still in what? We're still in an uptrending pattern. Okay. So at some point, I've got to say to myself, all right, this is not worth trying to short right now. It may not be worth going in long because it's so overextended. And yes, this could flush at any minute. I don't know how many people out there have shares of this stock. There could be some multi-billionaire that's holding a huge position here, and maybe he's going to dump it at any chance he gets. I don't know. But as a short bias trader, I don't even want to think about going long because honestly, going long is not my strong point. I'm looking for shorting opportunities, but this is still uptrending. It's still an uptrending pattern. So at some point, I've got to say to myself, you know what? It's not worth it. I need to back off. Okay. So that's the first step of recognizing what's happening. Just step back. Pull it out to a one, slow down the chart. Pull out a 1 hour chart of it. Pull out or at the very least, a 15, 30-minute chart. Of course, always look at the daily pattern, but kind of zoom out of it. And if it doesn't seem like this chart is really forming the kind of pattern that you need it to be forming to be suitable for your trading strategy, then just don't deal with it. Recognize it. You need to recognize that out the gate. The other thing that we need to recognize is irrational behavior. We can look at by candlesticks as we see them recovering major moving averages, and that's something that we kind of pointed out on the pattern here. I'll bring it back down. One thing is that some of these candlesticks that were forming, like this one right here, this is almost kind of considered like a gravestone doji, and I see it forming here. And so right here, I'm like, man, this is closing. This looks pretty bearish right here. Okay, and yes, it did ultimately work out to be bearish, but again, when you're a day trader, you're trying to capitalize on quick intraday scalps and the volatility and that sort of thing. And we saw that it couldn't break back up to the highs, or that it couldn't get it back up to the highs. Okay, it got rejected. The sellers obviously slammed it back down. So I get in here to go short, looking for it to finally break through these moving averages, and what happens? It shoots up. It shoots up again. And it looks like it's going to come up and break these levels. And so, yes, even though this candlestick is showing me that, this is a clear bearish signal, and yes, ultimately it did work out that way, there's still a lot of choppiness here. It's not like it just came and did this and just slammed all the way back down, right? It's not like it just slammed all the way back down. And same thing here. Even coming back on this candle, you can see how the buyers really bought this back up. And it maintained this support. So there's a lot of people that got in here thinking, man, this is going to continue to go. It's going to continue to go. But then what happens? It ends up getting slammed down again, and flushing down even further. There was just irrational behavior being captured in the moment. Okay. And we could tell by, again, candlesticks, and even as it was recovering major moving averages. Okay. So that's the second part of recognition. Looking at the pattern and watching for irrational behavior, choppy action on the stock. Okay. And then finally, if you lose 3 trades, if you've lost 3 trades on a stock, if you've taken your shot at this and you've got chopped out by all this, up and down volatile action, just stop trying to trade it. Go find another stock, get off of this stock right now until it forms a more recognizable pattern, until it forms a little more confirmation and starts behaving a little more rationally. Just get out. Okay. And here's the great thing about having a conservative trading strategy. You can keep these losers small. Now, I can honestly say that the 2 or 3 days this week that INO ripped my face off and reminded me that I'm not necessarily the best trader in the world. I can honestly say that when I took losses on it, they were very small because I was going in with very conservative share sizes. Okay. I recognize that this is a volatile stock. And a lot of people oftentimes want to get in and try to, do these quick scalping trades with 1,000 shares or 2,000 shares. And then they end up getting chopped out of that. And they take such big losers that it makes it really difficult to come back from these losses. But because I took 3 or 4 trades I got chopped out of, I took a very conservative share size and I kept them small. I think I ended the day yesterday only with a $120 loss on INO, and I actually ended the day in profit. If you go back and check out yesterday's video, I ended up over $300 on the day because I had other trades that went well for me and I kept my losers small on INO. But the great thing about stocks that are running up is you can take conservative share size. You can only you can get in with 2 or 300 shares, and even if it goes against you and you have to take a couple small losses here and there, and yeah, you might lose $100 or a couple $100 on this stock. With a conservative share size, if it actually does end up working out in your favor, for example, if this did actually end up slamming down to these levels and dropping $1 or maybe even $2, I could have made 300-400 bucks on 200-300 shares as it was going down and just gradually piecing out of my trade. And then, of course, I would have even looked for opportunities for it to bounce back and test levels. I might have been able to add to my position, but I could have tossed around 200 or 300 shares a couple times on a drop like that and ended up making, like I said, 300, 400, maybe even 500 bucks. You can do that with a conservative share size. Here's the second part of dealing with an overcommitted trade idea. So first, you need to recognize it. You need to recognize it. And by the way, I made this first step red because oftentimes that's what's happened. Oftentimes, when you're in an overcommitted trade idea that's continuing to work against you, you're obviously already in the red. Maybe not in the red on the day, but you're at least in the red on that stock. And you might be in the red on the day because of that stock. So, number two, what do? Walk away. Why do I make this green? Because walking away is what will at least keep your account in the green. Okay? You may be in the red on that trade, or you even may be in the red on that day. But if you walk away, you can still walk away with a green account. You can still walk away with an account that'll allow you to come back and continue to trade more, whether it's later that day or the next day. Okay, so we need to see this. I want you to keep a mental picture of this in your mind. Okay, the recognition phase is usually red because you're getting killed on the stock. But I want you to look at walking away as green. I want you to identify walking away as green. Yeah, it's one thing for a trader to tell you, hey, just walk away. It's another thing to have this picture of green in your mind and what that really means to preserve your account. Walk away. And here's something you can do. First of all, log off the broker. Take a walk, grab coffee, use the bathroom, whatever, watch some trading videos on YouTube, eat lunch, hop on on social media, log on to Facebook, go on Instagram, go see what your friends are up to, scroll around, maybe email with a buddy of yours, go chat with somebody in Discord, whatever. Make a phone call. Do whatever you got to do. Clear your head. Read stories about traders losing a lot of money. That always helps. If you've lost on a trade, if there's a trade idea that's not working out for you, and if you just log off your computer, even if it's just for an hour or a couple hours, you can always come back. That's the great thing about the market. It always offers other opportunities. Okay? And if you can even just Google some stories, read about some guys who blew their accounts. At least, at the very least, even if you're down a couple $100 on the day, at least you can think to yourself, man, at least I'm not that guy. Wow, I still have an account. I'm still in the green on my account. I'm still going to be able to come back tomorrow or even later today or whatever. I'm still going to be able to come back and have money to trade with. That's huge. That is huge. Okay? Now, I'm not saying that I always do this stuff perfectly. As a matter of fact, yesterday when I was continuing to trade I&O, even though I was losing, I stayed in the markets. I actually stayed in the markets all day yesterday. We had the longest running live stream that I've had since I've started this thing. But I was chatting with other traders and I was green on the day. I had other stocks working for me. And so, I did not do this. I did take a couple breaks. I walked away. I muted the microphone and walked away a couple times. Again, it really is the difference in being red on the trade or being red on the day. Okay, and I really do. I am a strong advocate. If you're red on the day, you need to take a break. Go do something else for a while and come back. And I think that these are definitely some great options. Okay, especially the one about reading stories about traders losing a lot of money. But even watching some trading videos on YouTube, if you look up some of your favorite day traders and go listen to some of the advice that they're giving, it can really pump you up and get you in a more positive mindset. But you got to clear your head. Again, this is called the trader's mind. Viewing things this way and doing things to reset your mind, especially when you're losing on an overcommitted trade idea, it's going to be good for your mental health, like I said. So there's really no better way to put it. But moving on. This is something else you can do. If you have access to a trading simulator, come back later and just jump into the trading sim. Spend the rest of the day in the simulator. That's always a useful thing to do. So it feeds your crave to trade, but it also allows you to practice how you would continue trading this overcommitted trade idea. But really, what I recommend is if you're going to even get into the trading sim, or even if you're going to come back later that day, find another stock to trade. Just find another stock to trade. I did this multiple times this week. When INO kicked my butt, I actually just ended up going and trading the TVIX because I knew the TVIX was affording really good opportunities. The SPY has been acting very volatile here lately. We've been seeing a lot of dips in the market, and the TVIX is a great long position to take whenever you're seeing the SPY continue to push down. Okay, so it's very practical to me. I just thought to myself, you know what? I'm going to trade the TVIX. And actually, because of the TVIX, I was able to end in the green every single day this week. TVIX provided amazing opportunities, excellent opportunities, okay? But there's a caveat to this. Find another stock to trade only if, number one, you haven't come close to your daily max loss. Now, why did I place so much emphasis on the words come close? Because if you've come close, say your daily max loss is $500 and say you're down $400. Don't come back and trade another stock. Just don't. You've already lost multiple times to an overcommitted trade idea. In my opinion, if you've come close to your daily max loss, it's just not worth it. Now, if your daily max loss is $500 and you're only down maybe 200 on the day or whatever, 150, 200, maybe even $300 on the day, if you feel like you have some opportunity to come back from that by trading another stock, not the one that's been kicking your butt, don't revenge trade it, but another stock. And if you haven't come close to your max loss, then sure, yeah, maybe it would be worth doing that. I've done that several times. And because of it, I was able to end in the green. I was able to dig myself out of the hole. There's a lot of traders out there that'll say, if you're in the red, just stop trading. Okay, well, maybe that's what you need to do for yourself. But me personally, I'm pretty big on, if you take a break, you log off your broker, you do other work, you clear your mind, and then if you can come back and find another stock. And if you're not really hitting too close to your daily max loss, in my opinion, why not? I have had more green days doing that, digging myself out of the hole, than not. Okay, so if my win rate, if the probabilities of me coming back in and being able to dig myself out of the hole on a day-to-day basis are pretty good, then I'm going to do it. But I'm going to find it on another stock to trade, okay? Only if you haven't come close to your daily max loss, and only if it's a highly probable trade idea. Don't just jump on any stock. Take something that's a highly probable trade idea. And you know what? This goes back to the conservative trading strategy. If you take a very conservative amount on it and you're not risking too much, it's very possible that if it's a highly probable setup and this trade idea moves in your direction, even if you just take 300 or 400 shares, you might get a really nice trade off of that. That's number two. So walk away, and if you come back, these are the caveats here. So finally, number three, and I made this blue. I wanted to make this blue because this is refreshing here. Live to trade another day. I want you to think about that. I want you to identify that. This is a refreshing idea. Live to trade another day. Just take a deep breath. You get to come back. Tomorrow's another day. You'll always have an opportunity to make money, especially if you know that you have a proven trading strategy. Okay? Look, if that stock beat you up the other day, I'm not saying to completely ignore it, but don't revenge trade. Keep that stock on watch, but don't revenge trade. Because here's the thing, guys. At some point, Inovio is going to come down. If we look at it here on the daily chart, I mean, look at this. This stock is running parabolic. It's even making moves. It's even getting up here close to some previous areas of resistance. Now, it could break out. So far, it's tapped up. Basically, it's tapped up here, and it's started to fall. It may not be able to break through this, but come Monday, it might break through this. And what I need to do now is just watch the daily chart. Just sit on the sidelines. It's not that I can't ever trade this stock again, because at some point, my trade idea is going to work on this stock. And I might be able to make all the money back that this stock has taken from me, and then some, and then some more. Because when this finally does start hitting the backside of the trade, when this trend starts trading, or this trend starts moving in a different direction that's more suitable to my strategy as a short seller, I'm going to make a lot of money on this. But right now, we don't know what this is going to do. Right now, we don't know if this is going to come in Monday and break through all-time highs and just skyrocket. This could end up being a $150 stock just weeks from now. I've just got to sit in on the sidelines. I've got to know that I get to live to trade another day. I'm going to come back in Monday. I'm going to have a fresh perspective, but I'm going to keep it on watch. And when the pattern finally starts looking like it's more of a tradable pattern, and when the stock finally starts behaving a little more rationally, I'll be able to capitalize on it. There's always going to be another opportunity here. But what I'm going to do is I'm going to come into the market. I'm not going to look to revenge trade it. I'm going to keep it on watch, but I'll continue to come into the markets and look for other stocks to trade, other stocks that are forming those good patterns. And you know what? I'm going to continue to prove to be a profitable trader. And at the end of the day, that's what it's about. How can we be a consistently profitable trader? And so I hope this video has helped you guys. And I'm sure a lot of you have been in that place, that same position where you have been way overcommitted to a certain trade idea. Those are the trades that can wreck us the worst. Okay, those are the trades that can become account killers, just like with Joe Campbell. You don't want to wake up one day and be down $100,000. All right, it's just not worth it. Hopefully this gives you the mental preparedness you'll need when going back into the market this week. And hopefully this makes a lot of sense to you guys. Like I said, I really want to continue to do these episodes on the trader's mind because I've told people time and time again, trading is maybe 10% knowledge and education. Yes, it's good to have the knowledge. It's good to study. It's good to research. It's good to really have a great wealth of understanding, wealth of knowledge when it comes to day trading as far as fundamental analysis, more so technical analysis and all of that stuff. It's good to know how to read price action. It's good to have an understanding of just all of these things tied to day trading. But you know what? It really is, the other 90% of it really is psychology. It really is this. It's trader psychology. It's the psychological behavior that is associated with day trading. And I genuinely believe this is why there's such a high failure rate in the day trading community. It's not because people don't have the knowledge. Yeah, I think maybe a lot of it is, people just jumping into the market and they're just gambling with it and they're just throwing money at it. They really haven't educated themselves. I think that's part of it. But there's so many people out there that are completely, fully, highly educated on this stuff and they still fail. Why? Because they don't have the mental discipline or the emotional control. A lot of it really does come down to what you're thinking, what your thought process is. Just like with Joe Campbell, he was fixated on this thought and he was so committed to thinking that there was going to be a $2 fade that he actually put a ton of his money on it and sat on it overnight. And so I guess to sum up, my message to you would be this: don't be that guy. Don't be overcommitted to any trade idea. Live to trade another day. Hope you enjoyed this video. If you did, like, subscribe, share it with others. Take care.